Let me paint you a picture of insanity. Right now, as I'm speaking to you, China has 27 months of housing inventory sitting empty. 27 months. Do you understand what that means? In a healthy market, you want 3 to 6 months of inventory. That's equilibrium. That's balance. 27 months means China has built so many apartments, so many condos, so many housing units that even if they stopped construction today, completely stopped, it would take more than 2 years to sell through the excess. And they're not stopping. They can't stop. Here's the number that should terrify you: $18.9 trillion. That's how much debt China's local governments have accumulated, and it's almost equal to their entire GDP. How did this happen? Because for 2 decades, local governments in China made money by selling land to property developers. It was their cash machine. Developers would buy land, build massive apartment complexes, sell units before they were even built, and everybody made money. The local governments got revenue, the developers got rich, and Chinese citizens, 90% of whom now own property, watched their wealth multiply. But it was all a lie. It was the biggest Ponzi scheme in history, and now it's collapsing in real time. In 2021, Evergrande, once worth $51 billion, defaulted on its debt, $278 billion in liabilities. Then Country Garden followed, then dozens more. 77 property developers have defaulted since 2020, 77, and these aren't small companies. These are giants that employed millions of people, that built entire cities that were the backbone of the Chinese economy. Now let me tell you what's happening right now today in December 2025. Home prices in China fell 3.7% this year. They're going to keep falling through 2026. New home sales are down 11.2% year over year. Property investment has dropped 16%. And here's the kicker. Just this month, Vanke, one of China's biggest remaining developers, nearly defaulted on a $285 million bond. They got a temporary lifeline, but everybody knows what's coming. It's not if, it's when. The property market in China has been cut in half. In 2020, developers were selling $2.7 trillion worth of property. This year, they'll be lucky to hit $1.3 trillion. The market has collapsed by 50% in 4 years, and it's not done falling. Now, let me tell you about the 3 lies that created this disaster. Because if you don't understand how we got here, you won't understand why your investments are about to get crushed. Lie number 1, property only goes up. For 20 years, the Chinese government and every real estate developer in the country told Chinese citizens that buying property was the safest investment in the world. Prices doubled every decade. Your grandmother, who bought an apartment in Shanghai in 2000, saw her investment increase by 17 times her annual salary. 17 times. So what did Chinese families do? They bought more property. They bought second homes, third homes, apartments for their kids before their kids were even born. 90% home ownership sounds great until you realize that property represents 70% of household wealth in China, 70%. In America, it's about 35%. In China, every family bet everything on property, and now that bet is imploding. Lie number 2, the government will always bail out the market. In 2020, when cracks started appearing, Beijing implemented the 3 red lines policy to limit developer debt. It was supposed to stabilize the market. Instead, it triggered the collapse. Developers couldn't borrow anymore, so they couldn't finish projects. Millions of Chinese citizens had already paid for apartments that were never completed. They're still making mortgage payments on homes that don't exist. The government tried stimulus packages, interest rate cuts, reduced down payment requirements. Nothing worked, because you can't stimulate demand when consumer confidence is destroyed and people are watching their life savings evaporate. Lie number 3, this crisis won't spread beyond China's borders. This is the most dangerous lie of all, and it's the one I need you to understand. China's economy represents about 18% of global GDP. Real estate in China, it was 30% of their entire economy at its peak. 41% of Chinese banking system assets are tied directly or indirectly to property. When this sector collapses completely, and it will, the shockwave will hit every corner of the global economy. The World Economic Forum estimates that every 1% decline in China's GDP reduces global GDP by 0.3%. This isn't a China problem. This is a global catastrophe waiting to happen. And here's what nobody's talking about. The wealth destruction is personal. When property prices fall, Chinese consumers stop spending. They're already in a debt trap. They borrowed against homes that are now worth less than their mortgages. Consumer spending in China is collapsing. And when Chinese consumers stop buying, who suffers? Apple, Nike, Starbucks, Tesla. Every Western company that depends on Chinese demand is going to see revenues fall off a cliff. But it gets worse. China is the world's manufacturing hub. When their economy contracts, they export deflation. Cheaper goods flood global markets. That sounds nice until you realize it destroys pricing power for companies worldwide. Corporate profits shrink. Stock prices fall. Your retirement account, your 401k, your pension, all of it takes a hit. And if you think your bonds are safe, think again. When global growth slows, even safe haven assets get repriced. So let me tell you exactly what's coming and when you need to act. We're not talking about some distant future. This is happening now and it's accelerating. First quarter 2026, you're going to see more major developer defaults. Vanke's temporary reprieve won't last. When Vanke goes, it's going to make Evergrande look small. Vanke owes $50 billion. That's real money. When they default, the contagion spreads to the banks. Chinese banks are sitting on trillions in non-performing loans tied to real estate. They've been hiding the losses, extending and pretending, but you can't hide forever. Second quarter 2026, foreclosures accelerate. UBS is predicting 2.4 million foreclosures by 2027. That's families losing their homes, their wealth, their future. But here's what's really going to shock the system. China has been keeping this data secret. They recently ordered private data agencies to stop publishing monthly home sales figures. Why? Because transparency would trigger panic. When those foreclosure numbers become public, when the world sees the true scale of the disaster, confidence will evaporate overnight. Third and fourth quarter 2026, the global impact hits. You'll see it first in commodity markets. China is the world's biggest consumer of steel, copper, cement, everything that goes into construction. When Chinese construction stops, and it's already down dramatically, demand for these commodities collapses. Australia, Brazil, countries that export raw materials to China, their economies contract. Then it spreads to manufacturing, to services, to every sector connected to global trade. Now, here's what you need to do right now to protect yourself. I'm going to give you 5 concrete actions, and I need you to listen carefully because this is about preserving your wealth. Action 1, reduce your exposure to Chinese equities immediately. If you own Chinese stocks, ETFs with significant China exposure, get out. I don't care if you take a small loss. That loss is nothing compared to what's coming. And if you're invested in Western companies with heavy China revenue exposure, look at their financial statements. Any company deriving more than 20% of revenue from China is at risk. Action 2, diversify out of real estate investment trusts that have international exposure. Global property contagion is real. When the world's second largest economy sees property values crater, it affects property valuations everywhere. I'm not saying sell your house. I'm saying be very careful about adding more real estate exposure to your portfolio right now. Action 3, increase your cash position. I know cash yields nothing, but cash is optionality. When assets get cheap, and they will, you want dry powder to deploy. I'm holding 20% of my liquid portfolio in cash right now. That's more than I've held in a decade because opportunities are coming. Action 4, look at investments that benefit from global uncertainty. Gold, Bitcoin, if you're willing to stomach the volatility. Companies with fortress balance sheets that can weather an economic storm. These are the assets that preserve wealth when everything else is falling apart. Action 5, hedge your portfolio. If you don't know how to use options, learn. If you don't want to learn, hire someone who does. Put some insurance on your portfolio through put options on major indices. It costs money, but insurance always costs money. The question is whether you can afford not to have it. Now, let me be crystal clear about something. I'm not a doom merchant. I'm an investor. I make money in up markets and down markets. The China property collapse is going to create opportunities. Distressed assets will be available at pennies on the dollar. Companies that survive will emerge stronger. But you have to survive first. You have to protect your capital so you can deploy it when the time is right. And here's the thing about China. They're going to try everything to stop this. More stimulus, more government intervention, more hidden bailouts. It won't work. You can't solve a debt problem with more debt. You can't fix a confidence crisis with propaganda. The mathematics are brutal and unforgiving. When you have 27 months of inventory and prices keep falling, eventually you reach a point where the system breaks. The Chinese government knows this. That's why it's their #1 priority for 2026. But priority doesn't mean solution. Some problems are too big to solve, and this is one of them. So here's my final warning. The next 12 months are going to be volatile. You're going to see headlines about China stimulus packages, about green shoots in the property market, about government intervention. Ignore the noise, watch the data. Home prices, sales volumes, developer defaults, bank stress, those numbers don't lie. This isn't fear-mongering. This is reality. The China property bubble is bursting right now, and the global economy is not prepared for what's coming. Your government's not going to protect you. Your financial advisor who's been telling you everything's fine isn't going to save you. You have to take action yourself. Review your portfolio this week. Make the hard decisions now before they're made for you, because in 6 months, when everyone else is panicking, it'll be too late. Don't be that person.